Good morning, all. CamelbackTrading.org coming to you this Friday morning, January 6th. And we're looking at my charts this morning because I think it's a lot more important to see what's going on and to try to make this as visual as possible for you come 9:30 this morning. Right? You have non-farm payroll out at 8:30. So come 9:30, there's going to be a couple of possibilities. And I think it's easy to see them on the chart. Yesterday's range was just over $3. I did give you the wrong low. It was $378.76 yesterday in SPY. So I don't think one possibility is to open up inside of yesterday's range. I'm going to say that's most likely not going to happen. If it does, then there's no play whatsoever. Second possibility is a gap higher or lower. Once that occurs, then you start looking at the balance highs and the balance lows. So your important numbers at 9:30 will be yesterday's high and low from where the gap would be. And then would be December 21st high, which is the top of the balance. And then the next day, December 22nd's low, which is the bottom of the balance for our $13 balance. If you come out of the balance to the upside, well, the first thing you're going to have to deal with before you get to the top of the balance is the 20-day moving average, which is at 386.72 and will be lower when we open. So you'll be encountering the 20-day before you test the top of the balance possibly. On the flip side, if we gap lower, then the next destination would really be, except for a couple of daily lows, is your balance low. Your balance low is a weekly low, and then that puts things into even bigger danger for bulls, because if you take out the balance low, which would mean taking out the weekly low, there's an opportunity for an outside week down on the first week of the trading year. That's all you have to concern yourself with. Everything else is noise in here right now. So you look for, if it opens inside of yesterday's range, there's no play. I don't think that's going to happen. It opens on a gap, depending on the magnitude of the gap. If the gap is not huge, then I look for a long to get to the 20-day moving average, to get to the top of the balance. But if the gap's $3, $4 to the upside, there's no way I'm going to take that against the 20 or the balance high. On the flip side, if we gap lower by $1, $1.50, then again, I'll be looking for a short. Use yesterday's low as my out if we get back in and target the bottom of the balance. But if the gap becomes $4 or $5 and we're near the bottom of the balance, I won't do it the first time. So that's as visual as you can get, okay? And then, just quickly, I'll recap all of these charts, all three of these indices tonight. So here is the profile, right? Look what we've done all overnight. We just traded the whole range. This means nothing right now. Again, if you open up inside of yesterday's range, there's no play. Here's our balance. Look at this. Here's your entire balance. So if the gap's not that bad, you could take a long to try to get to the top of the balance. Same on the downside. But if the gap is anywhere near the balance high or the 20, not worth it. If the gap is anywhere near the weekly low and the bottom of the balance, not worth it. Please keep that in mind. Again, you'll be getting this live trading and webinar throughout the entire trading day for $30 a month. Thanks for the likes and subscribing. Good luck trading today, and we'll recap the day and the week at 4 p.m.